from from locals who are buying multiple properties and for foreigners who are entering the market in a big way. And that's why the government increased even Singaporean buying a second property to 20% from the 17%. And sometimes people say, what's wrong being a Singaporean to buy a second property? But the government really wanted to get out some of this group of people. And if you look at it, one of the biggest shocker was foreigners being made to pay 60%. From 30% to 60%, and I'll tell you how, because of these cooling measures, the developers reacted and how the market is going to perform this year and especially towards the tail end of last year as well. Okay, let's talk about one of the major concerns that we had was the elevated interest rate. And the federal rates, 11 hikes since 2022. And that was something, in fact, we started the year, the beginning of the year, we already started with a very high interest rates of well above 4%. Okay, and the federal did not stop. Federal, in fact, in September, even though they paused for the federal hikes, but no clear indication. And towards the tail end of last year in September, the federal still declines to hike, but points to rates staying higher for longer. That means they will just remain, they are not going to change any of those things. That was the federal stance towards the later part of last year. Okay, these were all again in 1st November. Okay, so federal holds rate steady, upgrades assessment of economic growth. So generally there were some positive sides as far as the federal is concerned. So basically, if I just take a very quick stock check of last year, the biggest challenges a lot of consumers had was interest rates. Number 2, economy performance. Okay, and number 3, generally they were hesitant because even in terms of the new supply wasn't there. So now let's look at some of the housing inventory. Okay, so in any assessment, whether you want to enter the market now or not, you always look at the inventory. Is there a glut? Is it that people are not buying? And then if you enter the market and buy now, will you end up with things which is not so good for you? Okay, and looking at it here, we can see fewer launches compared to 2019. That means in 2023, there were only about 7,500 units were launched. Yes, it is much higher than 2022, but generally you look at it in the year 2019, 2021, there were 11,000, 10,000 and 10,000. So the supply side was also in the last 2 years was much lower. But there was one other thing. In 2022, there were a lot of unsold units, but 2023, we had less stocks in the market. In fact, if you look at it overall, this is how the unsold stocks remain relatively tight. If you look at it as of Q3 last year, there were still 16,000 over units that were unsold. And how do I look at it? If you look at these things, maybe you can understand here. If I give you a little bit of a glimpse of that, here is, let's say here, you look at it as far as the core central region is concerned, the unsold units here are 1,512, and OCR as of the end of the quarter here, these unsold units are still 6,398. Okay, so these were the number of unsold units. And what is the bottom pick-up rate? Therefore, the unsold units, this is the average number of sales. The average number of sales is what I circle. The balance is where I'm showing you here is the 6,143, 4,470 and 6,134 units were the balance unit as at end of third quarter. And the average sales were like this, which means the take-up rate will take anything between, for core central region, the supply can last for another 4 years, while the RCR can last for another 1.2 years, while in the OCR, the price can, the number of units barely can last for 1 year. So that's what we meant by in terms of the number of units that was available in the market as of last year. Okay, now, but on the other hand, the government have also confirmed to increase the GLS, government land sales. That's in a way a little bit of on a positive side, because if we have got more government land sales coming on board, it will also further stabilize the prices. Therefore, when you look at it, in fact, in the last 10 years, last year, second half, and this year, first half, the first 2 years since year 2013, the government supply has come 5,000 per half. So the government is trying to pump in more land, and we know very understandably, because the government, you see, I want you to understand, because if you're a buyer investor, you need to understand to time, basically to say, are you entering the market at the right time? So what did the government did last year, April, to make all the cooling measures? Foreigners don't come, and the market is to be more resilient, and also supply more government land sales. So which means to create an opportunity for Singaporeans to enter, upgrade, buy a bigger private property at a reasonably affordable price. That was the key objective. Okay, and then the government did another thing. The government also ramped up. You see, in 2011 to 2014, when the last time when all the prices were very high, the HDB ramped up to 100,000 houses. So why am I talking about something 10 years ago? Because subsequently you will realize when the government increased the supply of BTO flats, the HDB property prices went down. And now, again, this is repeating, 2011 to 2014, HDB ramped up BTO supply by 100,000. Okay? Now, what happened? 2021 to 2025, which is up to next year. Okay? HDB planned BTO supplies 100,000. Okay, so these are all some of the comments from the newspapers that say HDB will ramp up the supply of BTO flats. Looking ahead, we are prepared to launch up to 100,000 flats from 2021 to 2025 if needed, subject to prevailing demand. So what is the government trying to do? Is to, I don't want to say it's because this year going to be election year or next year, we all do not know, neither do we want to speculate, but the government is always concerned when the real estate market goes at a very fast pace, ahead of inflation, and people can't afford. So the government is trying to prepare the market to be conducive for Singaporeans, and that's why there may be good opportunities for many of us to take advantage. And with all these things, how was the market reaction? You look at it hugely from this long stretch of from 1997 all the way to 2023. In fact, I just would like to highlight to any one of you, if you're thinking of getting the property and comparing it from different time frame, you must see. In the past, you can see this is Asian financial crisis. The property prices went down by 40%. Then during the dot-com crisis, property prices went down by 20%. Global financial crisis, they call it as the Lehman crisis, property prices went down by 25%. Then in 2013, when the government announced a series of cooling measures and the tsunami of all the cooling measures 10 years ago, where TDSR was all introduced, the property prices again dropped by 11%. But I want you to understand, some things have changed. Ever since, if you look at it in the recent times, you look at it here, in 2018, even though the government announced cooling measure, it only went down by minus 0.7%. And then 2020, when there was a circuit breaker, when people were all staying at home and the whole world was uncertain, and yet the property price only went down by minus 1%. And as recent as just last year, after another round of cooling measure, it only went down by minus 0.2%. And what was actually a bit of a surprise for a lot of people was, including myself, I did not expect that the last quarter, which was the fourth quarter, just announced 2 days ago, the property prices in the fourth quarter went up by 2.7%. In fact, I will give you a little bit more glimpse of these things. But what is really is happening here is this. Now, a lot of us need to understand from this chart. You see, people tend to say that, hey, maybe we should wait for a crisis. Maybe property prices like in the past may drop by 11% or 20%. But why is it so in the last 10 years? After the 2013 cooling measures, we have not been witnessing even a 2% drop in the property prices. In the last 6-7 years, we are talking about from 2017, 18, 19, 2021, 22, 23. The property prices, if you look at it from this period to this period, it has been relatively being resilient. The real estate market, you look at it from here, it has been resilient all the way to here. And despite there were many crises, including COVID and global uncertainty, Ukraine war, federal interest rate increasing, and Singapore's economy's growth was not at its best, why then the property prices has been positively moving up? And I want to tell you, I honestly think, not because I own a real estate company with most number of agents, I'm trying to say this to sugarcoat it, but honestly, deep in me, the Singapore real estate market has matured such that we are very unlikely to go through like previous crises of AFC or .com or GFC where the property prices will drop hugely. Okay, let me just give you an example. What I meant by, now that there are more than 600 of you listening here, in the past, there were many speculators during the Asian financial crisis.com because there wasn't a TDSR, there wasn't seller stamp duty, there wasn't ABSD for second property and third property, there wasn't a loan to value that if you buy a second or third property, you only get lesser loan. So there were a lot of people who were speculators, people who were bought property by just paying a deposit of 5% or 1%, whatever the amount, and then they tried to flip usually 5% for private properties, and they're all churn and they make a lot of money. But the government have put a stop to all these inefficiencies in the market. So what we are looking at it is, why is it so in the last 7 years the market has been relatively moving up? Yes, this market is keeping pace with demand, market is keeping pace with inflation, and the real estate market is resilient, and all the buyers who come in after 2013, 14, 15, they were subjected to TDSR, therefore they have the ability to hold on to the property. Even when there is a crisis, they will not dump the property. If they dump, they will be subjected to sellers stamp duty, and that's why, because of holding power, today's Singapore real estate market is so much more matured. Okay, this is something that I want to just highlight so that you get an assurance that if you enter the real estate market, it is not all bad right now, because we have got a lot of policies supporting the real estate market steady increase. Okay, this is where that I want to highlight to you. Okay, so if you look at it here, what was interesting here is this. In terms of the price increase, you'll be so surprised. What I didn't expect was a 6.7% overall, because it was mainly attributed by the fourth quarter. The fourth quarter alone was 2.7%, but because the first quarter was 3.3%, we know 3.3% was here. But then the government introduced the cooling measures in April. So immediately when the cooling measures were introduced, what happened? The property prices went down. Immediate reaction, because the foreigners start not coming and the market was a bit quiet, and then it slowly started to move slightly up, and then we see in the fourth quarter market has got its rebounded its confidence, and market went up by 2.7%. Overall property price index last year still went up by 6.7%. Okay, and then if you look at it in terms of non-landed, this is where, can you see the OCR properties? The OCR properties in fact went up by as high as 13.8%. You mean the outlying property prices in the fourth quarter was 4.6%. Okay, while the RCR and CCR went up by 2%, 2.0%, but the OCR has increased hugely. Now, for those of you who will be very surprised, do you know the bungalows, particularly detached bungalow in fourth quarter alone, went up by 16%. Already, you know, landed properties are very expensive. Already 5 million, and you know, a 16% it has gone up. So people who are waiting, can you imagine all those people who have been waiting because they think the 2024 is not a good year. Sorry, let me go back. For those people who waited in 2023, that is not a good year, because economy is not so good. Interest rates are going up, has gone up. Therefore, I don't buy. But what has happened? Just imagine all those people who entered the market at the beginning of 2023 last year. They did not have paid the additional 4.6% or 13% increase in the market or overall 6.7%. So that's my point. My point here is this: the market in Singapore is resilient and has done relatively well. Okay, next. But here, one of the better glimpse of it here is this. I'm just showing it to you. Private property prices overall, it has moderated. So that whatever the government has done, has that helped the market? Yes, for sure. It has helped the market. How has it helped the market? Because in many ways, if you look at it, initially it was in 2021 was 10%, but last 2022 was 8%, but last year it was 6.7%. So have we moderated? Yes. How was this moderation took place? Because the government introduced multiple measures. Okay. Next, if you look at it, and then look at the prices. Okay, so what are these three graphs showing? In pink is a core central region. In the purple or in the center is the RCR, rest of core central region. And where is the rest of core central region? The rest of core central region, we are talking about places that are just outside the central region. That means to say Marine Parade, Eunos, or to the extent of Balestier, just outside the central. And the central being District 9, 10, and 11. Okay, and Sentosa, and the Marina Bay Financial Center, and the downtown. Then you look at the green. The green is the OCR, the outside the core central region. Year on year, if we take the average prices of the newly transacted prices of the OCR 1 year ago, if people have just entered the market in January 2022, and then they enter in, let's say, March later, say January 2023 here, the price was 2091, and in December it was 2,200. So it has gone up by 13%. Okay, so that's what I meant by the real estate market is relatively resilient. Then the next question here is this: you will see in 2024 what are the likely things to happen. Okay, let's now look at it in terms of the moderation of prices and moderation in terms of sales activity. And we have seen something really positive in terms of the volume, but though some of them were expecting it to be hugely dropped, but overall I must say we have done in the last 7 years one of the lowest number. Okay, what are the two shades shows? The purple, okay, let me just annotate to show it to you in greater clarity. So what am I trying to highlight here is here in the lighter purple is secondary market. That means resale properties. Resale properties last year as of 24th December, because we haven't, URA will only release end of the month the actual number. So based on our own research, what we have found here is we have found 12,023 units of the private resale condominiums was transacted. And as far as a new launch is concerned, there was only 6,405 units were sold. Okay, that's as far as the new launch. Was it lower than last year? Yes, fairly it was lower. So we are talking about easily more than 10% volume drop. But if you compare to 2021 was historically high, 32,000 since here, the last 10 years ever since the cooling measures were announced. So the market is definitely subdued. Okay. And one of the key thing here is this. Then we ask, how has the market been advantageous for in terms of Singaporeans? Look at it. In 2010, the number of foreigners who bought was 13%, and last year was 4.8%, and now 3.8% only. Okay, it's almost back to 2021 during COVID when people cannot travel. But now people can travel, but foreigners are not coming in. Yeah, even though you say it is 3.8%, but you must understand 3.8% of 15,000, so which is only 591. You see, in 2021 it was also 3.8%, right? But look at the number was 1,087 because the volume was high. But today, if you look at it, the 3.8% only reflecting in the whole of last year, only 591 units were purchased by foreigners out of 15,000. So definitely it is a clear indication of foreigners are shying away from investing in Singapore because of the 60%. And what does that mean? And who's buying then? Therefore, when you look at it, 96% are Singaporean and PR. And same thing, if you look at it in 2010, it was only 70% Singaporean and 14%, which was 84%. Yep, in subsequently 92. But today we can say we are almost at its highest point. Okay? So it has been, in fact, 2020 and 2022, but especially with the lower volume, it is the Singaporean demand and the PR who are creating the demand. And then let's look at it, the slowing growth in HDB resale properties. And one of the key reasons here is, again, I'm talking about, remember I said, government introduced 100,000 flat from 2011 to 2014. Why? Because the HDB property prices climb up so fast, the government introduced, and then what happened? The HDB property prices went down, and then it moderated. And now the HDB property prices keep going up, 37% in the last 3 over years. To be exact, 20, 21, 22, 23. In 4 years, the HDB property prices has gone up by 37%. So if a property in 4 years ago was, let's say, 400,000, and then you take a 37%, it's almost 150,000 more has gone up. Okay, so that has been a positive growth. But what is it expected next year and the following year? I think the HDB property price will moderate. You know why? We already said about the 100,000 BTO flats, and because of all other things put together. And then you can see in 2021, HDB property prices went up by 12%. Last year, it went up by 10%. And this year, 2023, I'm very sorry, I always get confused. This year, last year, I better don't use that because we just crossed over to 2024. In 2023, it only went up by 4.8%. What is our prediction for this year, for 2025? Again, 4 to 5% only. Okay, so public housing is going to be moderated. So what does it mean for a lot of people who are owning public housing? I think the public housing was in doldrums in the past. Okay, I give you what am I highlight, what do I mean by that? You look at it here. You see here from 2013 to 2018, what happened here? You see, remember when the government introduced in 2011 to 14, 100,000 houses, the effect take place after 1-2 years was negative. And then slowly it inches way up, 0.1, then 5%, then 12%, then 10%. Now it's coming down. And what are we expecting subsequent years? Then you can see it come down. It's from 12%, it come to 10% to 4%. And I'm very sure in the next couple of years, HDB is only going to do less than 5% growth, keeping pace with inflation. So what does it also mean? It may be a good time for people to reorganize the property portfolio to maybe upgrade, whether it is an EC or whether is it a private resale or whether is it another of those public private property new launch that you could seriously consider. Okay, so these are some of the opportunities that you can take advantage of as far as the upgrading from a HDB to a private property. Volume, yes, volume generally has been positive, but not as high as 2021 and 2022. But quite close, but I still fall short of more than 1,500 units, but it's been very consistent, 6,000 plus throughout the 4 quarters, and HDB sold about 26,628 units. That was the part. And in terms of rental, okay, and actually the rental has grown just in 2022 alone was about 30%. But last year, it only grew by 11%. So it's still a very positive growth, but it is also slowing down. Because why? There are a lot more houses getting TOP'd, and a lot of people who have left have already come back, and the market is also further stabilizing. Okay, so moderation of rental across all region, but if you look at it year on year since November 2022, I just touched base to November 2023, the rental amount on by median rentals across the region of CCR, RCR, OCR has been anything between 2.5% being the lowest at the core central region, while the other two areas, we talk about RCR and the mass market, all has been about 8 to 9%. So this has been the rental growth over the last couple of months. Okay, now I've finished the first part. Now let me talk about how the developers reacted in 2023, because we have to study how the developers are looking at the real estate market so that they can stock up their land bank and what are their pricing going to be. Okay, one of the key things for sure here is this: the developers were sensitive in their pricing. So when we look at it, these were some of the new launch prices where the developer launched in the various part of Singapore last year. And Button House was in the core central region, had the highest per square foot of 3,200 and did very well, I must say, at 3,200. Either Tembusu or Dunman in the eastern side, they're all 99, but still 2004 to 2005. The OCR were all hitting 2001 above on average. Jaden, because it's a mixed development, hit 2475. The Reserve is also a mixed development, 2448. Blossom by the Park is an RCR, again 2000. So these were some of the few launches that did last year, and these were the prices, and developers were not pushing the price too hard, mainly because last year the market was quite sensitive because of all the challenges that we face. But one of the key things that I want to highlight here is this: Tembusu was launched in April after the government announced the cooling measures of 20% for Singaporeans and 60% for foreigner, and yet this development has almost close to 59% take-up rate, with 376 units were sold and 53% was sold on the launch weekend itself. So what does it say? Because Singaporean who wants to upgrade, they realized last year was still a good year. Though now last year the interest rates was high, right? But a lot of people who buy new launches, they are smart. They know. Because they only pay the initial 5% and 10%, the actual loan will only kick in down the road 1 year, 2 years, and they also know the interest rate will not be high in the future. So, and because when interest rates are low, what will happen? A lot of people will rush. Surely the developer will increase the price. In fact, we see Blossom at the Park was also launched about the same period of time in April, and yet was sold 82%. Okay, 75% was sold on the launch weekend itself, and thereafter it crossed the 82% mark at 2004. And then we look at the reserve residents, and the reserve residents, you see, on the launch weekend in May sold 70%, but by December 24, 90%. Then ask a question: a development with 664 units to be able to sell at 90%, and we are talking about today the price at 2005, and it is still moving and people are coming to pick up. Why? There's a value proposition, because I really think at 2,488 buying the reserve residence was a good buy. Yeah, as a mixed development and everything is connected. Okay, so again, Lantau residents 72%. Yep. And again, Lantau residence areas is another new township, and people went there and pick it up at $2,100 per square foot. Grand Dunman sold 615 units, but it's because it's 1,000 over units development at average of $2,500. Jaden was really towards the tail end. I'm showing November. So I'm showing the sales from April, immediately after the cooling measures, in May, in July, and in November, different period of the time. But however, the market has shown to be resilient because developers were sensitive in the pricing. Okay, so one of the key things here is this: the government has also come up with more land bid and developers a little bit cautious. We can see all the new land bid, but I also want to give you understanding. You see, this Lorong 1 Toa Payoh, the developer bidded at $1,360. $1,360 in November last year. 99-year leasehold at Toa Payoh. What will be the selling price? It will be about 2005. A 99-year leasehold at Toa Payoh is 2,500. So what will be the other prices? So prices are expected to remain to be resilient. Okay, so even moving forward, be it next year or even later part of this year, prices are not expected to come down. And here, even though some of the land you will see here, how come Lentor Gardens last time was $1,000, now the developer bidded only $985. Lentor Central $982. Does that mean the developers are going to sell lower because they bidded the land price lower? Not true. Why? Because last year June, the government introduced 1st June last year a harmonization of GFA definition, which means all developers from 1st June were subjected to not selling a huge space of your aircon latch and whatever it is. So they have a redefinition of the gross floor area, which basically means estimated reduction in sellable floor area for the developer will be by 6 to 8%. That means a developer will not, like I said, before 1st June, the developer can sell big, huge aircon latch to you and charge you money. But you know, aircon latch, you cannot be standing there. Yep. But because of the harmonization of the GFA, the developers were restricted, and as such, they will lose 7% of GFA. And because of that, the developers, even though bidded the land at a lower price, they factor the loss in their sellable profit. So that's why there were some corrections. But overall, we think the real estate market will still remain resilient. Okay, I'm at almost more than halfway, midway point. I'm just going to take a breather. Yep, I'm just showing you, unlock your rewards. Hi. You see, I've been talking about without a break, highlighting, but if you want a lot more reports, consistently we will be able to give you reports of the residential property market, and as well as be it private homes, or if you want to have office report or GCB, you want to understand trend, it's free for you. The 750 of you, as I'm exactly speaking, thank you so much for making time. And all you need is, it doesn't cost you any money. And if you become a PropNex friend, let me tell you, I'm going to launch in less than 2 weeks' time, where I can give you an opportunity for all of you to fly to Melbourne, free, Paris, free, Osaka, free, Tokyo, free, Seoul, free, or you're lucky you can go to all the 5 cities. So be a PropNex friend and just straight away get this and wait for more update. But in the meantime, free reports for you. Okay, so okay, I just want to say, if you want better tip, I'm going to move on to the next second part. So what is it to come in 2024? So we have talked so much about 2023, the challenges, the supply, and we also talk about how the developers reacted in terms of the land bid, the sensitive pricing, how the consumer reacted to some of the launches. What is it to come in 2024? First, positive news, economic recovery. So this year is going to be a better year. That means greater confidence. Next, interest rates are going to be cut. That means lower interest rates. People who enter the market now or take a loan, be it resale or be it new launch, can expect a lower interest rates. Unfortunately, if we still don't enter the market, inflation will still go up, which means price will still go up. Yep. But if the interest rate go down and the economy recover, you can expect more people will be rushing to enter the market in the second half. Which means to say, the first half still gives you an opportunity where people are still waiting for better understanding, and the fact that you understand the market well, you can take actions earlier. Yep. So, therefore, this is what all the reports, 13th December, 20th December, economists in MAS survey cut Singapore's 2024 forecast to this. But Year of Dragon to set bring new hope. In fact, this morning they say that the recovery and expected GDP in the last quarter by manufacturing has been outstanding. So everything is again pointing towards a positive growth. Okay, and then again, MAS set to improve in second half of 2024. Inflation to ease after drive, GST driven rise. So a lot of things are moving towards a positive 2024. And then we look at it in terms of federal holds rate steady, indicates 3 cuts coming in 2024. And you know, the minimum cut is 25.25 bips. If 3 cuts will be minimum will be 0.75, but maybe one could be 0.5 and then 0.5 and 2. At least we are expecting minimum 0.75 to 1% federal interest rate cuts in 2024. So does that sounds to be a positive news in our mortgage loan interest rates and for Singapore? Definitely. Will that spur people to be more confident? Because at the lower interest rate, they can have the greater ability to borrow more loans, and at the same time, they can also be stressed less because knowing that the monthly installment is not going to be hugely high. Yep. In fact, you can see in those people who bought last year when the prices were lower, in fact, if you look at it, at that time, the price were already, the interest rates were already, last year, January was 4.25, 4.5, 4.3. And today you can look at it as of end of December. The fixed interest rates for 2-year homeland, OCBC was able to provide 3.1, HSBC was able to provide 3.1, and imagine even another 0.5% cut in the next 6 months or 9 months. We are likely looking at 2.6, 2.7, 2.8 interest rates. And that is going to give us an opportunity. When interest rates are low, you will expect to see more people will look at the real estate market like in 2021, 2020, where then the property price start to move upward. What are the factors pushing up new home prices? You know, the land prices have been firm. It is not dropping hugely. In fact, it has not dropped. Some of the minor drop is because of the harmonization. GST hike already. Okay, this is what the harmonization. And then we talk about increase in labor costs, inflation of cost of raw materials. So if you're waiting for property prices to come lower by end of 2024 or 2025, I don't see that happening. I don't see that happening because I already know the land bid price now. I already know the construction costs. And I know interest rate coming down, and I know the demand goes up. So why must the developer bring down the price? Yep. So it's not likely to be. Okay. So here I just want to show you something. Expected increase in new launch. Okay. So if you look at it in the pricing of some of these increases in new launch pricing, either let's say we say in 2024 or some will also be in 2025. So look at it in terms of average prices. In Toa Payoh, we are expecting 2005. In Bukit Timah, we are expecting 2006. Clementi, we are expecting 2003 or more. Marina Gardens to be 2008. And if you look at it, some of the average prices of the RCR in 2022 was only 2002. But today is all 2004, 2005. And if you talk about OCR prices, in 2002 was only 1,934. Today, all the OCR prices can be as high as 23 or 21 or 2150 or 22. So you can't get at that old price. But the good thing is because developers are still sensitive, if you look at 2023 price, trust me, 2023 price, the average for all the OCR was 2146. 2146, huh? But I'm confident this year if you enter the market in the first half of this year, you still can get at the same price as last year or slightly lower because the developers are still sensitive to pricing. The minute the demand goes up, and some of the new project where the developer have to buy or lock in the new contract for the construction, where the construction cost goes up, the subsequent launch in the second half of this year or 2025, you can expect the prices to be higher than now. Okay, so what is our forecast? This year HDB has gone up by 4.8%. For us, we are still expecting HDB to go up by 4 to 5%. This year private property has gone up by 6.7%. We expect the private property to go up by 3 to 4%. I'm a bit conservative. I still think the property prices will still do well, but we are all not expecting the property prices to come down. That's for sure. Okay. Thank you so much, the 777 of you who were here together with me. Before I hand over, there's a short part two. Don't hang up, don't leave, because the next speaker is going to give you an opportunity why this development is rightly priced and is less than 4 minutes walking distance to MRT, and why with all the amenities, and this is the last plot nearest to the MRT and just here. But I just want to highlight to you here is this. What is this prediction? If you look at this particular chart, and this one chart can tell you a lot of story to you. Okay, so what am I trying to say here is this. Here, if you look at it, in 2015 to 16, an OCR outside the cost central region, the price was only 1,000. But look at it, by 2019, the EC price was 1,000. Okay, the EC price already crossed 1,000. But then at that time in 2019, the outside cost central region was 1,004. People were hesitant, but look at it now. The same 1,004 is what people have to pay for EC. So you just see the gap. Just by 3 years of not making decision, people who made the decision in 2016 bought an OCR at 1,000. In 3 years later, the same 1,000 can only buy them an EC. And those people who bought at 1,004 in 2020, now they have to pay the same price of 1,004 to 1,005 for an EC. So the longer we wait, we only downgrade the status or end up paying a higher price. So basically my prediction for 2024, OCR will be 2000 to 2003. If any development you go there, if the price is at in between 2,150, you can be rest assured you are entering as a safe price. The developer is not overpricing. You better pick up the unit. If it is a RCR, if you can pick up anything at 2.4 to 2.5, you are absolutely certain the developer has marked it to the lower tier, and you can be very confident. Use this as a gauge, and I want to encourage each and every one of you to have a good understanding of the real estate market. Follow us, keep in pace with us, and we will update you so much more that can help you understand the real estate journey as you walk together with us.